time and effort are not the most reliable factors for being able to produce results in trading, right? To me, they're just minimum, right? What's actually going to produce results? You got to have an edge, right? And you got to have the mental and emotional wherewithal to be able to execute that edge on a reliable basis, right? Expectations do not care about process. They do not care about learning. They only care about the end goal. And goals care about the end goal, right? Yeah, I want to make X amount. I want to be able to be this successful or reliable of a trader. But there's a very deep connection to the process and the how and the what you're doing and the problems that you have to solve and the learning that has to go in, right, in order to produce those outcomes. Confidence is an emotion, right? It reflects your perception of your skills, your perception of your experience, the value of your experience, right? And that perception can get easily warped when you have an inaccurate way of measuring yourself. So if you have high expectations of yourself, which again are implied guarantees, then the feedback that you're getting when you fall short of that standard is going to be negative. Only when you exceed your expectations will you get positive feedback, but it's so hard to do that. It really is going to happen. If you reach that standard, you get zero kind of confidence from that. The inchworm defines what progress looks like because the inchworm is a bell curve. Your current A game is the front end of this inchworm. Your current C game is the back end. Your A game, the very front end of your capacity, defines what perfection currently looks like for you. When what the inchworm shows us is that it's really more about your C game getting better first, right? So we look at this, right? C game moves forward, and that actually helps to shrink our range. So we're basically kind of less bad when we're bad, and that makes it a lot easier for us to perform well.
All right, welcome back, everybody. I'm excited to introduce our next speaker, Jared Tendler, who's an extremely experienced mental game coach who has worked with thousands of professionals in poker, golf, and trading. He is the author of multiple books, including The Mental Game of Trading and also the mastermind behind the Trading Psychology Masterclass, which I was fortunate enough to work with him on, creating that valuable resource, walking through his full system and an application of the system. Great experience, highly recommended. Today, we're going to dive into some more valuable insights from him. And Jared, thank you so much, as always, for being here. As I mentioned before we started recording, I think you add a really valuable voice to this conference. So thank you for your time and really excited for this.
Yeah, thanks, Richard. Happy to be here as always. My third year, which I, again, kind of enjoyed every time. And yeah, this time we're going to do something a little bit different. Before I kind of jump into my presentation, I do want to just reemphasize to everybody watching this the importance of donating to St. Jude. And it's awesome that you guys are kind of organizing this conference around that. I had a good family friend who had, their son had Hodgkin's over the past year. Fortunately, he's doing awesome. Was not part of the St. Jude system, was kind of in a local hospital. But childhood cancer affects a lot of families. So I've donated and really recommend that everybody watching this who finds value donates. And if you don't find value, donate.
Pay it
But
forward.
we're going to try to do both here.
Yeah.
So you can see the headline here, right? Correcting the damage from high expectations and perfectionism is the topic we're going to talk about today, or I'm going to talk about today. And just to provide some context for those that are not familiar with me or my system, right? In years past, I've talked about my system, in great detail in the first presentation. And then last year, I kind of went into the first step of my system, which is mapping your pattern. But today I wanted to kind of dive deep into a problem that I see regularly with clients, but is oftentimes hidden, especially the damage that gets inflicted from high expectations and perfectionism. And I do want to make very, very clear out of the gate, high expectations and perfectionism are not an inherent problem, okay? Many of the elite athletes, the elite traders, the elite poker players that I work with, they all have elements of high expectations and perfectionism. The ones that don't come to me with problems associated with this are the ones that are able to find like the delicate balance between the hard driving aspiration towards perfection with a pragmatic view of it and understanding and a ruthlessness around correcting their weaknesses and removing the imperfections that exist in their trading, in their approach, in their process, right? They're aspirationally driving towards perfection, but they understand that it's not really realistic over large samples, right? And so that's really important. That we're primarily using perfectionism and high expectations as a motivator, right? It's a driver. But for a lot of people, and not just traders, for a lot of people, one of the big problems, and there are many, I'm going to get to them shortly, but one of the big problems is the damage that it causes to your confidence. And this can show up in very, very subtle ways. And I've worked with many people, especially traders, who have come from other industries, right? They've been successful elsewhere. And now, either as a new career, as a way of making money on the side, or in trading their own, retirement accounts, right? They kind of come in with a level of expectation about themselves as traders, and that really slows up their progression, damages confidence, and really increases a lot of emotional volatility. In fact, any one of the primary emotional issues I see, greed, FOMO, fear, right, anger issues, obviously confidence issues, can be caused by high expectations and perfectionism. So today we're going to kind of cover a wide variety of approaches to actually correcting this. First, kind of giving you a good sense of the hidden ways that it might show up, so you can kind of find yourself here and see if it affects you. Because in my research, roughly around 60% of traders are struggling with problems associated with high expectations and perfectionism. So it's a wide, kind of big problem. I think more so than in poker and in other industries I've faced. And I think a lot of it comes from the success that many traders have had elsewhere. We're going to cover some very practical ways that you can begin to correct this problem. And by the end of the day, you should have a clear understanding of how to actually do that, right? So I'm not going to just kind of throw out the problem and leave you empty-handed, but I'm going to give you a very pragmatic roadmap. And for those that are unfamiliar with my system and my approach to trading psychology, that is what I'm all about, right? Providing a little bit of context, theory, larger kind of concept, but matching that with practical strategies that you can use immediately to get the job done. So, but again, just to give you a quick little overview of me, if Richard kind of alluded to a few of this, but I've been coaching in the trading industry for over a decade. I've worked with over 400 institutional traders, retail traders from around the world. Author of Mental Game Trading. I'm also a licensed therapist. I never intended to get in this field, but my own aspirations as a professional golfer were derailed, and mostly because of my own head. So kind of solved my own issues, got educated, got trained, and now I've been coaching for nearly 2 decades. Yeah, so let's get after it. This is a picture of Alex Honnold. Those that are not familiar with the movie, oh man, I'm blanking on the movie. Basically, Free Solo. So basically, Alex is known for climbing without rope. Okay, most climbers use rope. They anchor themselves to the mountain because they don't want to die. And Alex doesn't want to die either, but he's an incredibly sophisticated athlete who has been able to not only train his mind, but train his body to be able to produce unthinkable feats. And this is him free soloing, right? Climbing without rope, El Capitan, which is this sort of feature of that movie. And unfortunately, from a confidence standpoint, this is what many of you feel like, right? Where your aspirations, your successes, your progressions as a trader has measurably improved you, right? You've got real skill. But if your confidence doesn't go along for the ride, then it can kind of feel like you're kind of hanging out on a mountain and at any point can crash. And especially for those of you who maybe going to go through the trading combines, right? You get funded and then blow it up. You get funded and blow it up. Or you're trading your own account and you are able to scale up, but then, do well for 3-4 weeks, a month, 2 months, but then you have those big blow up days. I'm not saying it's the only reason, but there's certainly many of you who are dealing with those kind of boom and bust cycles, big ups and downs, a lot of paralysis, succumbing to FOMO, because this is how you feel. You feel subconsciously as if you're kind of hanging out on a mountain, untethered, right? And at any point, the bottom can drop out. And what we want is for you to feel like this, okay? Anchor to the mountain, you fall, right? You fall 10 feet, it hurts, not fun, but you're not dead, okay? That's what we want to go aim for, okay? And that's certainly going to be the goal of for me today, is to be able to provide that for you. But again, let's just make sure that we're all on the same page here about what these issues can look like, because it can oftentimes be hidden, okay? So here you are putting a lot of intense pressure on yourself to achieve. but there's parts of you that can't really handle the pressure. So maybe there's a lot of hesitation and fear, even around getting to trading. Maybe there's a lot of itchiness and antsiness where market opens and you're immediately taking trades and violating your strategy or system. Maybe there are times where you're going through a drawdown and you just need to take like days or weeks off because you just kind of can't handle the continual losing. In other words, you can't handle the pressure because of how much intensity you're putting on yourself. You hesitate to enter proper setups. I mean, this is a problem for a lot of reasons, but it certainly can come from perfectionism. And what'll end up happening for a lot of you is there'll be so much intensity around entering like that ideal setup, you'll miss a few of them, and then revenge will kind of creep up, or FOMO will creep up, right? You'll realize that you factually missed out on a few profitable trades. Let's say both happen to work out, right? And then that triggers anger. That triggers some desire to make up for what you should have had. And then you enter, invalid setups. They end up losing. And now here you are down at a day where you should have been up money. And then the spiral can actually get pretty severe, right? All because the beginning problem, the first domino to fall here is this hesitation caused by your perfectionism. Hyper analyzing a stock, but like missing the bigger picture. So there's sort of this kind of myopic, like zooming in because you want to make sure that you are like checking every little box on this particular stock, and you're not willing to pull the trigger on jumping in without without that. But then at the same time, maybe you end up doing that, but kind of missing some bigger picture in terms of how the market's moving as a whole, and the trade gets invalidated because of that. Okay. You have a hard time moving on and letting go or getting over mistakes, right? Because if you don't have that ideal balance of that kind of high driving perfectionism with an understanding of imperfection, any imperfection to you is like needles in your brain, right? And so you're going to get incredibly, like the word's perseverating, where your brain just kind of snowballs and spirals around these mistakes. You can't really let go. And as a result of not really letting go, you're going to miss other opportunities. You're not really going to be able to perceive the market price action quite as clearly. You're going to have some biased views on some of your sort of standard indicators, because you're either looking to get back for what those mistakes were, or you're kind of paralyzed in your mind, unable to see, kind of valuable or viable opportunities, and then only kind of see it after the fact, in the kind of the daily review. You become lazy or procrastinate for reasons you can't determine. I know this may sound a little strange, but there are many of you who procrastinate because of perfectionism. And it should make a little bit of sense, right? Because what will end up happening is the procrastination creates this sort of internal tension that, either is delaying, let's say you're researching, or, you're kind of half-assing your pre-market routine, your process, and kind of middling a little bit. There's not a lot of success happening. And it'll feel like you're just kind of delaying and delaying and delaying, and the tension that builds up until finally you sort of snap, and the tension's too big, and now you go guns blazing, you do everything perfectly, and you actually crush it for a month too, right? Until that energy starts to fade again, right? And what's causing that is that buildup of tension produces an extreme level of performance, which you now deem your version of perfection. But to do that, you become dependent on being lazy, right? The laziness precedes that top end performance. So yeah, now you need to become lazy again in order to create that internal tension, to create that high again. In other words, that high is kind of artificial, right? It's not like a more normal A game. It's this sort of more extreme version of it that's not reliable or something that you can produce, again, without laziness or procrastination. You never applaud good results, or not for very long, right? The goalposts kind of continue to move, right? You kind of do the yeah buts to yourself, like, oh, had a good week, right? Not a great week, not a blowout week, but a good week. Saw some progress, didn't enter some trades that, months ago I would have, right? There's real tangible progress, but you're like, no, well, that's kind of what I'm supposed to do. So, whatever. And you kind of move on. You have diligent research, and that kind of raises your expectations, both about like the viability of a particular trade. So now you're kind of expecting it to pay off because of how well researched it was, and how diligent you were, maybe, and even back testing your strategy, right? expectations raised. And even though intellectually you know that the probability of this trade being viable is, let's say, well, let's just say you got a 70% chance, pragmatically. In your mind, it feels like it's 100, right? And so when it stops you out, you become incredibly frustrated, confused. You might lose confidence as a result, right? The expectation kind of is an implied guarantee. And again, kind of like the zooming out to other market information, right? There may just be other information that you have or have access to, but again, that diligent research kind of closes you off to it. You become self-critical over the slightest missteps. So again, kind of like the mistakes thing here, but like sometimes they're not even really mistakes, right? Sometimes you might become self-critical over losses that are just variance. They're short-term, unpredictability of the market that you don't have any control of. And yet you become critical over it, right? Sometimes traders hate losing simply because they expect themselves not to, especially when they've, entered an A+ setup. You're constantly comparing yourself to others. Again, comparisons objectively are not bad. I think it's helpful sometimes to have some basis of comparison, right? And if you're falling behind, it's good to know, but to fall behind and then kind of look to others with a critical eye of yourself is not really helpful, right? It's not actually a comparison that's helping you to figure out what you need to do better or what you need to do differently, or maybe even ask questions of what they're doing that you could be, right? It's more of kind of an empty, self-critical, judging, jealous kind of comparison. Adding pressure when you're posting trades, like, look, many of you don't utilize resources that are available to you. Now, I have a community of traders that I'm working with, and the majority of them are not sharing the work that they're putting in on their mental game. So even in a close community of people who are like-minded and supportive, it's a fantastic community. They still have trouble getting over the hump to be able to expose themselves. And it feels there. So here you are, right? You're seeing lots of traders on social media posting all their wins and all these big trades. And here you are struggling, could actually get some viable feedback and, within the TraderLion community, within, the Twitter community that you feel or that you're surrounded with, or Discord that you're in, and you're withholding, or you're not able to reach out and allow yourself to look weak, to look like you're not understanding something, to be confused. Again, because you have expectations yourself. There's no judgment coming from other people. If there is factual judgment coming from other people, then they're not the people you should be hanging around with. Most of the time, the judgment comes far more intensively from yourself, and it prevents you from learning, and it prevents you from reaching out and getting help from other people who actually generally kind of like to help. I mean, certainly know the TraderLion community is very much within that ethos, right? They actually love it, right? The education that's being provided here. Feel like nothing is ever good enough, even after winning. So again, this kind of like the goalpost is always moving. It's like, yeah, exactly that. You kind of feel empty even when you're doing well. Free soloing, effectively. Have trouble relaxing due to the internal pressure. So, on a weekend day or on a weekday night, can you actually just let yourself chill out, after having a losing day? Can on the weekend you not spend 6 to 8 hours doing back testing week after week, month after month, diligently trying to do everything you can? And again, I'm not opposed to the aspirational nature, okay, of trying to be perfect. But when you can't relax, because the elite athletes, elite traders, they understand the necessity to rest. They understand that without it, they actually break down mentally. You don't want to show up on Monday, weaker than you were on Friday, right? You want to have the restoration to occur over the weekend so you can come back sharper and ideally stronger than you were the week before. That's what rest is all about. You go to the gym, you work out, you rip muscle fibers, right? You're telling your body, hey, I want to be able to produce this kind of force, this kind of strength on a reliable basis. Rip your muscle fibers. It's in the resting that the healing and the strengthening actually occurs. So here you are on a technical basis, on a mental basis, trying to improve as a trader. And if you're not resting because you can't, then that perfectionism and high expectation, right, is like now kind of out of control. It's not just about this high motivation. It's an unquenchable thirst that just can't let you rest. If it was balanced, you could be incredibly hard driving and get plenty of rest, right? Michael Phelps, for 18 months before the Olympics, would train 7 days a week. And I didn't think that was possible, but he sleeps like 10, 11 hours a day, or he did sleep 10, 11 hours, during the day. He'd train for 6 or 7, go take a 3-hour nap, go train for another 3 or 4, and then eat and go to bed, right? And it was like that. He did that for 18 months. So, but he and his coaches understood the value of rest. All right. Hopefully you found some things that feel familiar to you, okay, that you can kind of understand. And again, objectively speaking, you may not necessarily have weaknesses and confidence on a personal level, but trading oftentimes brings them out, right? And if you have anything that I've shown you, then the next 4 kind of puzzle pieces are going to be the thing that we're going to really key in on to help take this problem, to help to begin to kind of mediate and correct this problem. So first off, we're going to be looking at the difference between expectations and goals. And we're going to talk about how expectations create this faulty self-evaluation and the damage that ultimately gets created from that. We're going to provide a new definition of perfection for you. And then for some of you, not everybody, for some of you, you've had such big, painful losses, some mistakes from years ago that you can't let go. Okay, one client who I talk about in the trading book, he lost actually didn't factually lose money, but closed the trade prematurely, air quotes, and missed out on $250,000, like a very large sum of money for him at that time. And for us to move anywhere in getting him to be more consistent, and he actually was profitable by the time he and I started working together. But to really be able to scale up and move forward, we had to do more of this sort of removing the scar tissue, right? We call it kind of the trauma, the deeper pain points of the past that are really holding you back. For some of you, that is a vital part of the process and being able to move forward. All right. So let's look at the differences between expectations and goals. And my hope is that at the end of this slide, they should feel incomparable to you, because right now it may seem like the same, like, oh, well, expectations are my goals. Okay. But there's some implications between an expectation and a goal that's not just a linguistic choice. I'm not just choosing words. There's intent that matters much more. So if you want to say your expectations match the intent of your goals, then fine. Okay. I'm not going to get into a linguistic argument with you, where it's more about the intent that matters. Okay. So your intent of expectations cannot be the following. It cannot be an implied guarantee. Okay. I expect myself to be making X amount of money per year. I expect my account to grow by X percent, week over week, month over month. I expect to make money every day, right? A hidden one that oftentimes many traders wouldn't say they think, but deep down, their emotional reactions to losing trades or losing days tells us that they are expecting themselves, right? They're basically guaranteeing that they should make money every day. A goal implies a lot of learning and implies a lot of self-reflection to produce the results that you're ultimately after. Okay. If you're guaranteeing your results, that means that you already have the skills, knowledge, experience in order to produce those results. And to me, the people that I work with, those expectations are not, those implied guarantees are not actually real yet, right? They're goals, they're aspiring, they understand how much learning and progression needs to happen, but they keep getting tripped up because they're expecting themselves maybe to move faster, right? To do it within a certain time period. I can't tell you the number of traders who are expecting themselves to have already been successful by now. Okay. They're 2.5 years in, they're 3 years in, they're 7 years in, and they're expecting themselves to have been successful by now, by the amount of time and effort they put in. But we all know that time and effort are not the most reliable factors for being able to produce results in trading, right? To me, they're just minimums. Time and effort, minimum, right? What's actually going to produce results? You got to have an edge, right? And you got to have the mental and emotional wherewithal to be able to execute that edge on a reliable basis, right? You also have to have really good research skills. You got to adapt. There's a lot of things that go into trading. It's not a simple enterprise. But many people say, oh, well, I should be able to be successful here within 6 months, 10 months, 18 months. Like, where is that even coming from? It's basically just an implied guarantee that maybe is very wishful or hopeful. Okay. And it's time to delete it. Okay. Kind of already alluded to this, but again, expectations assume that you already have the skills. Goals assume that you have to acquire them over time, right? And that implies a learning process, and learning processes go through ups and downs, right? The implied, sort of linear progression. No stock actually does that. And yet here you are expecting yourself to be that, kind of mythical value stock that goes up, 5% month over month. Cares only about the outcome, right? Expectations do not care about process. They do not care about learning. They only care about the end goal. And goals care about the end goal, right? Yeah, I want to make X amount. I want to be able to be this successful or reliable of a trader. But there's a very deep connection to the process and the how and the what you're doing and the problems that you have to solve and the learning that has to go in, right, in order to produce those outcomes. And then lastly, expectations overreact to setbacks, right? Because they're not expected, right? The expectation is the outcome, right? The positive outcome. Goals, I mean, when I have clients go through my standard goals worksheet, the last section includes the problems that you are most likely to face, right? And so all the clients that I worked with and, through the new year, right, we're going through this process. We spent a month really diligently thinking about what problems are expected to come in 2024, right? And they prepare for them. Now, are they going to occur? We don't know. But going through that exercise keeps you open-minded, keeps you sharp, on the lookout for the mistakes, the setbacks, the unpredictable learning that, is ultimately going to have to be solved for. Because when you set out to become successful as a trader, to reach your next level of your goals, you don't always know all of the things that you need to learn, all of the things you have to solve for in order to get to that next level. If you think you do, you have blind expectations. And if you have appropriate goals, then you're more open-minded to the setbacks, to the unpredictable things that can happen, and you're just aggressive at solving them quickly. All right. So the next piece here, this faulty self-evaluation. Very kind of distinct pivot from what I was just talking about, but they all kind of links together. So here's the deal. When we're talking about confidence, okay, confidence requires really good feedback. Okay, when you think about kids developing a sense of competency, right? Imagine if they got zero feedback, right? You get zero feedback as a kid learning language, you will not be able to develop language. Okay. Think about learning baseball, basketball. Like imagine, shooting baskets and never actually getting to know if what you just did made the ball go in, right? You don't know if you made it, missed it, hit the backboard, hit the rim. You never get that feedback, right? Your perception would get very warped. Okay. So when we're talking about trading and we're talking about developing an accurate way of measuring your skills and competencies, which ultimately is what defines the basis of your confidence, okay? Confidence is an emotion, right? It reflects your perception of your skills, your perception of your experience, the value of your experience, right? And that perception can get easily warped when you have an inaccurate way of measuring yourself, okay? So if you have high expectations of yourself, which again are implied guarantees, then the feedback that you're getting when you fall short of that standard is going to be negative, right? In other words, you're going to produce negative feedback. And only when you exceed your expectations will you get positive feedback, but it's so hard to do that. It really is going to happen. If you reach that standard, you get zero kind of confidence from that. So here's what happens. Thousands of transactions, right? Individual moments, right? Where you're trading, and certainly this can be an issue in your personal life as well, right? Where you're getting negative feedback. What happens is you get an accumulated debt, right? Think about this as if it was actual money, right? Here you are like falling short of your expectations. You're losing out confidence, right? You're running into debt in a sense. And what that does is it produces a hole in your confidence. And as that hole gets bigger and bigger from years of measuring yourself inaccurately, you become more and more compelled to seek external results, to seek money, to seek certain levels of trading, levels of success as a way of filling that hole. So you become more and more desperate for success. You become more and more urgent. Again, kind of driving that intensity so high you can't rest and relax. That sometimes can come from this hole in your confidence, right? And it's solely due to the inaccurate way that you've been measuring yourself. Because if you had set goals for yourself, not expectations, right? You didn't have the standard here, you had it here. And I want to be very, very clear. We're not lowering your expectations. We are eviscerating your expectations, turning them into goals. So actually, let me just kind of rephrase this. Your expectations were here, okay? Your goals can be here too, right? But realistically speaking, there's a range of outcomes that are going to occur. And if your true expectation is down here right now, like the level of proficiency, level of performance that you can guarantee on a reliable basis from a trading standpoint is here, then everything from this point up until your goals, you get some measure of positive feedback from, because it's showing that all of the work, all of the effort that you're putting in is actually producing some results, right? In terms of your skill set, in terms of your overall process, your ability to execute, your ability to research and get feedback and to be resourceful, right? All of those skills that you're acquiring, right? They deserve feedback. Like they deserve accurate feedback. You deserve to get credit for it. And if you're not, it creates this debt. So the reality is many of you are sitting on gold reserves, right? You're sitting on like actual distinct assets when they feel like a liability. And that's solely due to your perception. So here's how you correct it. Okay, this is a worksheet. I call this the perfectionism worksheet. Effectively, you're going through 4 steps. Okay, you can see them listed here. It's not overly complicated, okay, but it does require a regular diet because you're trying to reshape perception, reshape your perspective on your skills, on the value of your accomplishments, to begin to kind of fill that hole, reconcile that hole internally. There's no amount of money that you can have. I've worked with 7-figure, 8-figure traders who have had this problem. Okay. There's no amount of money you can have that can solve this problem. You have to solve it internally. Okay. So here's what you do. Okay. Before even looking at this worksheet, I want you to spend some time listing out your past accomplishments in trading. This is a personal issue. You can do it on a personal level too. Okay. Or it can be both. List out your past accomplishments. Okay. Spend 5-10 minutes one day, just like bullet point on. And what you're looking for specifically are the ones that have kind of gone under-recognized. Okay. And then you're going to start plucking them out and going through this process. Describe the accomplishment in detail. List and describe the key steps you took to achieve it. What difficulties did you encounter along the way? And how did you get through them? And if you made mistakes, what lessons did you learn? Okay. You can see there's some overlap in these questions. Okay. I'm not looking for perfection in your answers. I'm looking for a robust understanding of like what produced those results, what produced that accomplishment. Because if it's just kind of headliney, hanging out and kind of hanging out there, you end up kind of looking like Alex hanging on the mountain with nothing really supporting him. Okay, we want you to actually be able to understand the mountain of knowledge and experience and skills that you've acquired that are really kind of going under or even unrecognized. And here's the key, and you'll see this in the instructions at the top. You are not allowed to do this for very long every day. Okay. You will get far more out of it by spending 5-10 minutes once a day than you would from doing it for like 1 hour once a week. Okay. Because you can't eat food for a week. And when you're starving yourself of the feedback that you have earned, then you need to kind of have a regular diet to reconcile that. Okay. And begin to kind of steadily, identify it. Because what can happen, and this has happened, you do this for an hour on a Sunday, you're going to come in on a euphoric high on Monday, and the expectations are in there. And because you feel so great and the expectations are still there, I mean, you are very at risk of overconfidence and making big mistakes for different reasons than you would normally. Okay. So the idea here is we want to have some recognition, just pats in the back here. We're not looking to like go out and throw parties here. It's just give yourself the pat on the back, the recognition, some a little bit of pride, a little bit of satisfaction for the things that you've accomplished that have not been noticed before. 5-10 minutes a day. You want to do it a couple times a day, cool, but not like back to back. Like think of it like kind of eating meals. So maybe in the morning, maybe the afternoon, the evening. You want to do a little bit more on the weekend, fine. But again, like really kind of up to like 15 minutes. You do it too long, you really risk producing too much, a kind of elation, and that can be problematic. Okay. And if you want to download this, you can get it freely available on my website, jaredtendler.com/worksheets. I got a couple examples here that I'll go through briefly. One's a trading example, one's a personal example. Okay, so this is from a kind of a newer trader. Passed the combine evaluation to earn funding and was able to take payouts from these funded accounts. Okay, how'd you do it? Well, steps I took to pass accounts, get funded, to make money. Took lots of studying. I learned how to read price action, technical analysis, liquidity, balance, etc. I learned how to journal effectively to be able to learn from my previous trades and understand my trades and market better. I'm able to better identify targets versus just taking profit because I'm green or hit a certain percentage. From studying and journaling, I was able to develop a strategy that is a step by step. If X happens, then look for the next step. And if X happens, then enter. I learned to adjust my trading. When I'm off for summer, I can look at higher frequency timeframes. But during the school year, when I can only trade the first hour of the open, I adjust the time frame I focus on and adjust the targets accordingly. Lots of time, classes, reading, studying, reflecting has gone from my day one to today, and I'm still continuing to learn. I mean, you can imagine, right? Like intellectually, all of you who are struggling with this problem could very easily do this. But when you don't, in the heat of the moment, right? Like trading is intense. If you have not taken time to at least acknowledge what is listed here, in the heat of the moment, that debt in your confidence is what's going to produce outside levels of emotional intensity. But you start to do it, start to go through this process, and all of a sudden, that debt gets a little smaller. There's internal stability. There's strength and integrity in your confidence. And you just kind of naturally feel more at ease because you know how you did it. Not just in your mind, but there's proof. You can see it. There's a little bit more strength and integrity to that knowledge. Okay. And we look at the next few parts here. The difficulties I encountered were learning from different people or groups and not understanding their strategies, or the strategies had low hit rates. From there, I would try to reverse engineer and learn and understand why. I like to know the why behind things so I can try to develop a more efficient way of doing something. I took a lot of losses, blew up lots of accounts, lost lots of money, dedicated a lot of time. I had to accept that I could only trade the first hour of the open during school year, and had to accept the way that I traded had to be different than when I was able to sit and watch the whole morning session. I kept pushing forward because I continued to learn and understand more and more. I was able to get through the roadblocks because I enjoyed learning from my mistakes. Every mistake I made along the way was a teachable moment. The other thing here is that there are things that you don't know, right? You start kind of like writing this out and you will create some insight that you didn't have before. I know that this was true for this client. Okay, lastly, if you made some mistakes, what lessons you learn? In the beginning, I believed mistakes meant I was not learning or improving. But with time and reflection, I realized that trading is a long game, not a get-rich-quick scheme. Losses also forced me to look at my strategy and figure out where and why things were not working, getting stopped or not hitting my target. The losses and blown accounts forced me to be honest with myself and look inward, which led me to the psychology of trading part. Okay, so again, good validation for the process too, because like if you're doing something that's working, well then keep doing it. But sometimes you stop doing it because you're not giving yourself proper feedback. I can't tell you the number of traders who I've worked with who stop journaling. It works. Like they all know what they should do it. They do it for 3 months and they're killing it, right? Not just from a P&L standpoint, but there's just like clarity. They really feel like they're in sync with the market. They're just in a good mode. And then they get sick, they go on a break, whatever. They come back and they're like, probably don't need to do it anymore. And it's like, kind of slowly fades away. They get into a slump. They come to me and they're like, all right, what's going on? And, we start talking about journaling. Oh, yeah, I know. I did that for a while. It worked great. Well, why'd you stop? Sometimes you stop doing things that are working because you haven't taken time to validate the fact that it was part of what led to your success. A plus B does equal C. But if you forget B, it's just like it happens so often. So again, this process can be really valuable, even if you don't have this problem. Really valuable as a way of providing some good reflection for yourself. All right, just for the sake of time, I'm just going to kind of go through this one quickly. But this is a more personal example from a very successful rugby player playing the national team in rugby. I was taken out of the Swedish national team in rugby for under 18 players. I had played rugby for about 5 years and one of the best players in Sweden in my position. I played wing. You had to be quick. You had to be good at catching balls, throwing it to you at full speed since you were the last guy in line. In the beginning, when we were young, they put all the sucky players at that position since you could do the least damage in that position. And that was the reason I started to play there as well. But with time, I grew into the position and started to love playing there. You got to score a lot, and it was not as messy as other positions. Played for many years, played with many people older and more experienced than me. I think a lot came naturally since I was always athletic and a rough kid. But one important thing was that I really liked playing and had fun doing it. And the other thing was that playing with older men in the US when I was 16, I played the shit out of them and really bloomed out. Got better. Okay. Difficulties. Overcoming my fear of getting hurt, not being able to catch the ball, right? Fear disappeared with growth. And then lastly, did not put the time in effort in my rehab. If you want something, you have to work for it. I busted my ACL the first spring practice on the field, was young and indestructible, didn't go to the doctor, right? And so things got worse and worse. And so when I started working with this trader, right, there was an element of their confidence that just didn't really match, right? Very, we weren't successful. We weren't as successful as they knew they could be yet, but there was certainly like an edge in the market they knew they had. But there was like an inconsistency in their execution of it that was just odd. Yeah, and it really came down to like not understanding that the dude was like really capable, right? I mean, to be able to become that good at rugby tells you that there's a lot of capacity. And does that guarantee success in trading? No, but it does give you a lot of conviction that you can do and be more in other places. And that was kind of what was undercutting their consistency. It's like they'd have a little bit of success and just didn't really feel a little bit of that kind of imposter syndrome, right? Really kind of feeling like kind of unstable, insecure, again, in a weird way. It's like, objectively speaking, I know what I've got here, but couldn't do it reliably. Okay. So last part here. So what I've just talked about is kind of reconciling the debt historically, but you can also get ahead of it and take care of what's happening in present day. So here are 3 questions that I would suggest that you are looking at on a daily basis. Okay, it's part of your journaling, part of your daily cool down. If you want to do it weekly, fine, but like it needs to be done regularly. How'd you perform? What'd you do well? What'd you learn? Right? Just very, very simple questions to ask on a regular basis. You spend 2 to 3 minutes looking at it. You will create those little pats in the back. More importantly, you're going to find the little parts that need to be fixed faster and the parts that don't need to be fixed. Because so often, we kind of forget like, oh, wow, I've been making progress on this thing I've been working on, and I lose sight of it for a little while. All right, come back to it a few weeks later when it kind of reemerges as a problem, right? But when you have a more clear plan, right? What are you doing well? What are you learning? What are you working on? And how are you performing on that? It kind of keeps it top of mind for a lot longer. Okay? You're not going to just like randomly play whack-a-mole every day and like be measuring yourself on a variety of different things every single day. That doesn't make sense. Learning can't be that kind of random. So when you have, a bit more consistency in how you're measuring yourself, you're going to have more consistency on what you're actually working on and be able to get it to the point where it actually makes distinct progress rather than playing that game of whack-a-mole, which is certainly not fun. And the other side of this is you got to reduce your self-criticism, right? And I know this is hard. I have a client right now who has been working incredibly hard over the last 3 weeks trying to reduce their self-criticism. And it's brutal because you can be self-critical about the fact that you're still being critical, right? Just reflexively, you get pissed at yourself, but then you shouldn't. And no, it's a battle, okay? But the idea here is to try, and you can make progress as he certainly is. Okay. Key thing here is like criticism needs to be productive, not destructive. That's how you. Like, I'm not saying don't be critical of yourself. I'm very critical of my clients, but in the right way. Right? It's all about producing growth, all about fixing problems. It's not just this empty, negative, destructive cacophony noise in your head that is basically just like an a-hole coach, a-hole manager that's not really actually helping. Right? So turn the harshness into learning and motivation, right? And do that consistently. And at the end of the day, I want you to be more of a detective, not a dick, right? Be introspective, be curious, be more of a researcher, not just having these empty expectations of yourself. All right. Two more pieces of the puzzle here. New definition of perfection. Okay. And the definition is that perfection is a target you can hit. Many of you don't even know what that definition is, right? And actually, throw out one more piece here. You could take time right now to define what perfection is or define what your expectations are of yourself. Okay. And if you did that, you would understand the emptiness of them. Okay. But let's just assume that we're going to go more conceptual here. The idea is that you can reach levels of perfection, but not for very long. As soon as you do, they're going to move. Okay. Perfection is a standard that's going to continue to rise over time versus this mythical, illusory kind of perfection that just kind of continues to hang out and move without you really realizing it. Okay. For those that are familiar with my work, know this guy, right? The inchworm. The inchworm defines what progress looks like because the inchworm is a bell curve. Okay. Your current A game is the front end of this inchworm. Your current C game is the back end. Okay. Your A game, the very front end of your capacity defines what perfection currently looks like for you. Very different from a 30-year veteran trader, right? Some of the presenters here at this conference from a trader 2 years in, right? Your current best, your current standards are very, very different. Okay. So it's your individual bell curve. You cannot overnight become that 30-year veteran. Like it's not possible. You can't even acquire, years of experience in a day. Okay. So your capacity, your definition of perfection right now is capped. I don't care what level you're at, right? Myself included. Can it get better? Hell yeah. But how's it going to get better? Right? Many of you only see the A game progression. You only see your best getting better. When what the inchworm shows us, okay, is that it's really more about your C game getting better first, right? So we look at this, right? C game moves forward, and that actually helps to shrink our range. So we're basically kind of less bad when we're bad, and that makes it a lot easier for us to perform well, right? When you're under the heat of and the pressure of trading, right? It is intense. You're in the most competitive marketplace in the world, right? Many of you have paid access to compete in the NFL, the Premier League, the PGA Tour. Do you have the 5, 10, 20 years of experience like playing this game before you even became a professional? No. I mean, you might have 2 years in. Like if I was 2 years into golf playing in the PGA Tour, I would be puking on the first tee with nerves. I mean, it's like incredibly intense. Okay. So, under that intensity, your C game becomes much more likely to be exposed. When your C game is a lot stronger, it is so much easier to produce your A game because you know that you can't be that bad. And when you can't be that bad, I'm not saying you can't be bad, but you can't be that bad. It's a lot easier for you to be good. Okay. And again, this is all relative to each other. Okay. So, primarily, you want to look to reduce your C game before you look to eventually improve your A game. And that oftentimes just happens naturally. Okay. The like, how am I going to take my trading to the next level really gets produced when you're experiencing intuition and you're in the zone. And, you can get in the zone more consistently when your C game is stronger. And then your A game naturally gets to advance and you can reach new levels of perfection without actually really even realizing it. All right. So the last piece of the puzzle, as I talked about at the outside, is this removal of the scar tissue. So a lot of this has been, kind of identifying the aspects of your skills and experience that have kind of gone under-recognized, a little bit of change in perspective on expectations and perfection. But what happens when you actually have these old memories, these big losses, these big outsized blown accounts? Client of mine who's been, slowly drawing down his IRA for 7 years. And it's like, oh my God, I cannot believe the hole that I am in. And you feel like it's like this mountain that you have to climb out of. But like that puts too much pressure on yourself day in and out, day out, because you're trying to like today, like maybe today I can, escape it, right? Maybe today's the day. And this could be a big driver of FOMO, right? Why you're constantly looking for home runs, because you're trying to kind of get out not just of the factual debt or the losses, but of the confidence ones as well. But to remove the scar tissue, we're going to adapt a tool. If you're not familiar with my work, I use a tool called the mental hand history. This is how we're kind of breaking down like more normal mental game issues. But when you've got like trauma, you got scar tissue, we have to adapt this worksheet slightly. Okay. And so here we go. Step 1, describe the painful memory in detail, including vivid sights, sounds, sensations, as well as identifying the most painful part of it. Okay, so big blown account. Most painful part was having to tell my wife, right? Big blown account, or some big missed opportunities. The most painful part was just like going on Twitter and seeing everybody celebrating, and here I was, kind of holding nothing. Explain why it makes logical sense that you're still holding on to this memory. Why, like, these experiences are to be learned from, right? Failures are not paralyzing they're not paralyzing when you have learned from them. Mistakes, losses, right? When you learn from them. But like, okay, but why are you still holding on to it? I can't forgive myself, right? I should not have been so stupid. I knew this was going to happen, but I didn't trust my intuition. I cannot forgive myself because I knew I should have closed. I knew COVID was going to have a huge run. I just was too chicken shit to get in quickly, right? When the Fed steps in, right? From your answers in step 2, define what is flawed about your perspective in that time or now upon reflection, right? So, right, there's reasons and rationale and logic for why this memory is still sticking around, why you haven't learned from it, but there's something flawed there about your perspective, right? Maybe you have hindsight bias. Maybe it actually is due to the perfectionism, right? And the expectations you have of yourself. Maybe you hate losing. Maybe you feel like a failure and it's more of a personal issue. Okay. Now you're going to come up with a correction of that flawed logic, right? And what you can learn from this memory and use productively going forward. Okay. And in a way, this begins to kind of morph into kind of what happens in that perfectionism worksheet, where we're uncovering the value and the knowledge and skills beyond the headline. So here you got the headline, big loss. In the perfectionism worksheet, we've got headline, big accomplishment. In both cases, we're trying to unearth the value, the skills, the knowledge, experience that it can actually help you, right? Whether it's from a positive experience or a negative experience. Okay? And the last question is a bit of a bonus, right? How is that correction correct? And how can that lesson help you? Okay. So again, this worksheet is freely available on my website. And here's one example. Okay. I first attempted day trading in the mid-2000s, about a year after bouncing from mechanical strategy on equities to discretionary pattern-based equity trading, then ultimately to futures. I entered a natural gas trade on Friday afternoon. These were pit-traded contracts, and the trade went in my favor quickly, and I decided to hold the trade over the weekend. I used up all my margin to hold this trade, which was already a terrible decision. This particular weekend was the weekend Hurricane Katrina hit New Orleans, which was what was expected to be about a 4K winner, ended up turning into a 40K loss when the electronic markets opened Sunday evening. Ultimately, I had a bit of luck when the price had a rather large pullback coinciding with the pit opening. When I was able to close the trade, I attempted to continue trading for several months, but never effectively processed the loss or margin call mentality. It would be well over a decade later before I even contemplated trading as being something I could possibly try to do again. And while I don't think of this event consciously, and this is a key point here, sometimes these things are just in the back of our minds, like consuming resources and adding to emotional volatility. You don't even realize it. that at least I can notice. I feel like it's feeding confidence and fear issues, at least on the subconscious level, as I'm acutely aware that a single bad decision could derail everything. So that's kind of what's happening in present day. Like this like underlying fear that at any moment the shoe could drop. At any moment, Alex Harnold is going to drop to his death. At any moment, you are going to fall. Right. And yeah, it can be due to that accumulated debt. It can also be due to some painful memories. Okay, why does it make logical sense? You're still holding on to this memory. It was traumatic, right? Including the study time and backtesting plus live trading. I invested about 2 years of my life into something and failed, completely altering the trajectory of my life. Okay, what's the flaw here? While I invested time and effort and failed, that time was haphazard, and I never stuck to a strategy or a system. I was not actually prepared for the risks I was taking. I was in over my head and I was gambling. It's hard realizations, but when you come to them, when you can actually really be honest with yourself at that level, well, then you can start to break apart the scar tissue, because I can promise you this trader never gambled again, never felt like they were in over their head again, and never realized, and now was able to see that a single bad decision today was not gambling. So then there was no risk of the mistakes of the past happening again. I've learned a lot over the years since this happened, while only very recently have gotten close to a more clearly defined strategy. I've been following a singular strategy path and trading a single instrument since restarting this journey. I've never held a trade overnight and have zero plans to ever do so, and don't see any reasons I would ever attempt it, deviating from that. While I've had issues with moving stops and putting on trades with unclear risk, those mistakes are increasingly infrequent, and I believe were more related to prior lack or more clearly defined strategy. I now have years of experience that I did not have in the original trauma. My strategy, while only recently becoming clearly defined, accounts for the issues that led to the blow up. By following my rules as they are today, no single decision can remove me from the game. Right. So again, this is not necessarily applicable to all of you, but if you find it, man, it can really start to free some things up and maybe help to explain why you have some asymmetrical emotion, right? Sometimes you'll just react to a loss, or you'll react to a missed opportunity in a way that just feels so out of proportion. And sometimes it's because of an accumulation of past losses or missed opportunities, or failures that just not just produce a lot of emotion, but you're just kind of holding on to this emotion, almost like a pressure cooker, that when it explodes in ways that are asymmetrical. All right. So what was your biggest takeaway? Throw your answers in the chat. Was it the accumulated debt? I think sometimes a cause of a weakness in confidence that isn't really talked about or known. Is it ways of kind of reevaluating your accomplishments? Is it this new definition of perfection, or maybe the insight that you have some trauma, some scar tissue that needs to be addressed? All right. As I mentioned before, you can download free worksheets. I've got many of them, not just the ones that were mentioned today. jaredtendler.com/worksheets. Other resources, if you're interested in more of my work, Richard already mentioned the Trading Psychology Masterclass, which is on TraderLion. I mean, it's a very, very robust course. If you want to kind of walk through my step-by-step system for trading psychology, this is a very robust course for you to do that. We're going to go through all the different steps of my system in very, very great detail, give lots of experiences of how to go through each of the tools, so there are kind of really no uncertainties around kind of how to actually do it. And I would say Mental Game of Trading as a book, if you haven't read it, certainly pick it up. You can kind of, if you don't want to, if you're more kind of the hands-on learner, you don't have to read the book cover to cover. You can just kind of jump right into the masterclass, because it does cover a lot of the material that's there. And we did produce it in a way that was very different from what's in the book, and kind of walks you through that. I mentioned it to you earlier. I do have a community of traders that I'm working with. It's called the Mental Game of Trading Live, right? I host these strategy sessions, kind of 1 hour opportunity to discuss a particular topic, go in detail, get feedback, effectively getting coaching from me. There's 3 of those 1 hour per month. You can post worksheets, you can post questions on the community, in the community. You can connect with like-minded traders and form your own accountability groups. And there's also a knowledge base where there's pre-recorded content on a wide variety of topics that you can access on an on-demand basis. All right. Thanks to TraderLion and Richard for hosting me today, and certainly wish all of you well in your trading journey. And if you want to connect with me in any way, you've got the access to that here.
Wonderful. So first of all, Jared, thank you very much for putting that together. I think my personal takeaway was to add to kind of my post-market routine, listing those accomplishments a little bit, what I did well, to just kind of build that confidence, consistently. I think that's a really good one. Um, Now for the Q&A, I've got some questions planned. If you guys have any questions, list them in the chat, please. But first things first, kind of taking a step back, way back to the beginning of your presentation, Jared. Sorry to go all the way back there. But I wondered if, in your experience working with traders, you talked about traders who are, they're grinding every weekend, they're trying to back test for 8 hours, what have you, and they just kind of really need to take a step back and focus on recovery. Um, what are some signs that traders should look out for that maybe aren't as obvious as that situation, but are signs that, hey, take a week off, take a break, take a step back, focus on other hobbies for a little bit, and then you can come back refocused with a clearer head, to work on your process.
I say the easiest one is like if you've kind of plateaued, right?
Hmm.
If you're progressing, right? If the work that you're doing every weekend is producing some tangible improvement, maybe not week over week, because sometimes that can be hard to occur with the inconsistency in the way things play out with trading. But if like, weeks over weeks, month over month, like if you can see the trend line is like clearly progressing, then it's a judgment call, I think, whether or not it's like kind of true burnout. But generally speaking, if you've plateaued, that means you're just making the same mistakes. You're kind of stuck in a rut. Maybe things are actually factually worse. Your performance could factually be really kind of in your C game and you can't really get out of it, right? You need energy to produce your A game, right? Again, if we're kind of recontextualizing this definition of perfection and what expectations and goals are, you cannot expect your A game. Your A game is earned. It's earned primarily through having the right energy, having the right preparation. And if you don't have enough energy to produce your A game and you're really kind of stuck in this like B game cycle, C game cycle, then yeah, you actually can really benefit from taking that step back and having a weekend off. I'd say the other one is if you've gone like months without time off. When we're talking about, like, just to provide a bit of an analogy here, right? Elite athletes, elite, let's say power lifters, right? They are generally, like the Michael Phelps example, I think is an atypical one. Like, he was freak athlete, Olympian. Right? But for most elite, most very successful athletes, powerlifters, like there's periods of expansion and consolidation, kind of like a stock. So if you haven't given yourself a chance to kind of consolidate a little bit with time off, with a little bit of rest, with a little bit of kind of deeper reflection on what you've done over the last 3 to 6 months, then I would suggest taking time off just for that reason. I mean, I think that every trader should take 4 weeks off per year. And ideally, like once a quarter, you're taking a week off. Now, most traders, especially institutional traders, will never do that. And I understand that, right? Because the pressures are so high. But when you think about the value of being at like a peak level of energy, peak levels of clarity, focus, intensity, and the value you get from those steps back where you have some insights and are able to kind of have better sensation of the market, right? I didn't mention it, but I have a free intuition ebook on my website. It's also part of the TraderLion Masterclass. But like if you're accessing intuition reliably, like what's the value of that compared to kind of middling and being stuck in this B and C game cycle? Like you could be making money there, but you might be missing out on some really, much higher level returns consistently. So I'd say generally speaking, if you're stuck, take a break. If you haven't taken a break in a long time, take a break and just see if it actually produces some value.
Yeah, and I was actually kind of thinking about this a few weeks ago. I like went over my trades, and this kind of started the thought. But on Mondays there's often a lot more emotion. Everybody's hyped up for the week. There's gap ups, gap downs. And I noticed in my trades, I would get stopped out more often on Mondays than other days. And that coupled with maybe building in more recovery into it, I've flirted with the idea of just taking Mondays off and saying, hey, my trading week is a 4-day week that starts on Tuesday, and kind of dedicating that Monday to just monitoring current positions and not really looking to enter anything else. Um, for kind of those two reasons. One, noticing getting more stopped out, but also just building in more recovery time and seeing how that could benefit me. So I haven't decided to do it, but maybe I'll experiment with that in the coming weeks. Um,
Just to finish up, sorry, I
yeah,
think
go
the
ahead,
key word you
please.
said there was experiment.
Yeah,
I think if you as traders can kind of look, and you specifically can kind of look at the whole of like, you are researching and experimenting, like not just in terms of your style and edge, but also your process and
yeah,
routines. And yeah, when you get to a point where you can, experiment with like your week and what the week looks like, what like factually speaking, Richard, like what is the downside for you taking 1 month, like 4 weeks, and experimenting with taking that Monday off? I think you're guaranteed to learn something.
right,
And it might be that it's not worth it. In which case you can check that box off and you can move on confidently knowing that you have a 5-day work week and maybe there's some adaptations you make to Mondays. Cool.
right.
Okay, I can confidently do that now. But maybe you find something of distinct interest, of distinct value that you could not have predicted beforehand. Again, I think the experimentation, if you just kind of define the period, sometimes we just like flirt with it and maybe like try it like 1 week. It's like that's not a big enough sample size. Like do it for a month. I think there's no downside other than maybe some short-term P&L that you might miss out on.
Yeah, I think you've convinced me to try it, so I'll
All
give it a
right.
shot. Let you know what happened. Um,
Cool.
Also coming back to kind of the very beginning when you're talking about people come into trading thinking they can be in the arena right away, have success, especially if they're high performance in other fields. We did excuse me, we did a class where with John Boyk, where we looked at some of the top 7 market wizards from the past 100 years and kind of their journeys, and every single one of them, despite ending up being top traders who can make millions of dollars, they all needed around 7 years or so to learn their system and just break even. And that 7 years, that's not like a hard and fast figure. It's not like you hit the 7-year mark, you're going to become a market wizard. But what that means is even the top traders who are giving it their all need to work on this, work on their C game, and gradually improve until they get to that level. So having the expectation that in your first year you can do as well as these, um, just again, that's a little bit unrealistic, and just focus on the process, focus on the goals versus the expectations. I like your point there. Um,
Yeah, just to
yeah,
provide
please.
maybe a little bit of analogy here, like a rocket ship uses, I think, I mean, it probably depends, but like at least the space shuttle use like 50% of its fuel in the first like 50 meters, 50 yards. It's like an
Yeah,
insane amount of fuel was used to just create that momentum. But again, like that momentum doesn't mean that they've created escape velocity, right? To be a market wizard, to be like truly exceptional, you have to have enough sustained momentum. So I would say that it was like 7 years of like kind of building the energy, that momentum to be more internal, right? Like
yeah,
so many traders go through big peaks and valleys. I think because they kind of lose sight of things when things are going well. And then when they're struggling, they kind of are overreacting to the struggle and not kind of keeping that like more consistent process. I don't know what those market wizards process were, in great detail. I don't study it, but I do know that the like the continual learning should be there regardless of short-term results,
yeah.
right? It's like whether you're struggling or succeeding, if you have consistent process, right, that is going to generally produce more reliable results and outcomes long term.
Yeah, at TraderLion, we kind of say it, approach trading as a student, and like always have that student mindset where you're always learning. If a trade works, great. What can you learn from it? If it goes poorly, great. What can you learn from it? Um, you know, a mistake is only a mistake if you keep making it over and over again. If you don't learn from it.
100%.
Um,
Yep.
um, One more thing I want to mention, excuse me, I think this kind of adds to a lot of the high expectations, especially to traders starting out, is the social media component, which you touched on. On social media, you're seeing traders who have been doing it 20, 20 years, multiple decades, whatever. They're posting 100 plus returns on a monthly basis or yearly basis, whatever it is. but they're just at a different point in their journey than you. But new traders still are comparing themselves to that. Why can't I get that? You know, it was possible. Why can't I do that? It's just kind of those expectations, um, and just being honest. You know, hey, I can learn from their process. Take a look at their feed. Take a look at resources that they have to learn towards that. But it's going to take time. It's going to take effort moving that inchworm along for years, decades, even to get to that point. So I think social media it's very noisy, and I think it's a tremendous resource, but also you have to be aware that it can skew your expectations, and it can be a negative as well.
Yeah, there's a lot of overconfidence that people bring into the markets, and there's a lot of, I think, misaligned expectations, which is that it should be a place where I can make easy money.
Yeah.
And when you have that expectation coming in, then yeah, you're gonna kind of compare yourself to people that are really kind of incomparable to you right now, other than the fact that you both, enter trades. That's not really the comparison that you ultimately want to be making. So yeah, I would say 100% right. But I always kind of look at, like, if you're somebody who is swept up in social media in a negative way, then you really have to examine, like, your motivations and your expectations of yourself first and foremost, and look at the problem with social media as being more of a symptom of that rather than
Mhm.
it being the problem in of itself. Because at the end of the day, like, they're just a bunch of people who are coming in and utilizing this tool in the wrong way, and the question is why, and the answer to that question is really helpful, and maybe some of it's been answered in this presentation today.
Yeah, for sure. And also, you went through those two worksheets, which were great. You mentioned the goals worksheet. I don't know if you could bring that up quickly and maybe walk through that quickly, or you could also just describe it, because I think that'd be a good resource as well, and that can also be found on your website, I know, as a free download.
Yep, and it's also part of the TraderLion Masterclass.
Hmm.
Yeah, so here it is here. um Again, in a way, this does kind of fit with the presentation, because we're firmly setting goals, not expectations. A. B, we're looking at the process goals, like the how you're actually going to attain them. So results goals can be, right, I want to eliminate tilt this year. Or it could be, I want to make, 100K a month. It doesn't matter what the, I mean, again, aspirationally, I encourage my clients to aim as high as they want. I don't get to decide what that is, but I do want the right perspective about what they're aiming at, and then to have the right, general sense of time frame for when to achieve it. But the why behind your goals is really important, because um, why you want these things is going to help. Sorry, identifying why you want these things is going to help in those moments where you're tested. If you come into
Yeah,
these goals blindly expecting them, then you're not really going to be prepared for those setbacks or those more difficult days. And the why is going to kind of keep you motivated, keep you kind of working. The process goals, right? Kind of like, okay, if you want to eliminate tilt, how are you going to do it? You want to achieve, 100K a month or 100K a year. Like, how are you going to do it? Like, what are you doing in an improvement sort of way, right? Your C game, right, is what's expected, right? The aspects of your trading that you've already kind of mastered from a technical standpoint, from a research standpoint, from a process standpoint, like, they don't need to be part of your goals. The goals are for the things that you're learning and trying to improve on. So how are you going to scale up? How are you going to increase your profitability this year? Right? It might be around just executing your strategy, as mechanically as perfectly as you can, right? Not taking any discretionary trades for the first 6 months of the year. Okay, that could be a goal. And then lastly, you're looking at the problems you'll likely face and beginning to establish a plan on how to do that. And sometimes going through that process actually helps to change some of your process goals, because as you start to realize, like, oh, well, I am at risk of burnout, right? So the problem you were talking about earlier. Well, then maybe one of the goals is to take more regular rest, and or the goal is, like, to research for the first 3 months of the year, like how much rest is optimal, right? And sometimes that means overdoing it, and it's an okay mistake, quote unquote, to make, because of what you're going to learn from it. So again, I think the process of kind of going through all of these different steps really helps to create a robust approach to trading, and then ultimately it helps to reinforce a robust approach to your own kind of goals versus expectations.
perfect. Well, Jared, thank you again for your time for putting all this together. We'll have the links to those resources in the chat. We'll drop them in right now. Is there any kind of final message that you want to leave everybody with today, either regarding the presentation or just trading or trading psychology in general?
Yeah, I guess I would just aspirationally say that there isn't a problem out there that can't be solved. You just have to be willing to look, and sometimes look in ways that you're not used to. So, whether or not you have this problem or others, if you're struggling and not able to kind of get out of it, uh, yeah, I just encourage you to look, and to look without judgment, because I think, especially in the mental and emotional side of trading, mental and emotional side of performance, it still can have a negative connotation to it. Okay. And it's just one of those things that you put the time and effort in, there is distinct value here. But I think sometimes people are gun shy to do it because, there's this perspective that like trading is all about psychology and trading is 90% psychology. And the reality is that that's not true. Trading is first and foremost about the X's and O's, right? Your execution, your strategy, your system. That matters most. Trading psychology comes in primarily, at least the way that I approach it, in helping you to make the most of your strategy and system. Yes, there are trading psychology perspectives around, kind of really molding your personal psychology to your system. And I respect and appreciate that. But from a problem-oriented perspective, right? Uh, you can solve any problem. You just have to spend a little bit of time looking, and it can be difficult and confusing, but there's lots of resources out there, including mine, that can help. You just got to be willing to do it.
Excellent. Well, Jared, thank you again. I always learn something new talking with you, so appreciate it. I'm sure everybody watching did as well. And if you did, make sure to check out Jared's resources for additional information, as well as leave a like down below and donate to St. Jude's if you found this valuable. Or as Jared said, if you don't find it valuable, it's still a great cause. So go ahead and do that. So Jared, thanks again to everybody watching. Thank you for tuning in, and we'll be right back. Take care.